what I understand, guys, is that the more we trade in the lower time frames as scalpers or as intraday traders, it is the more we become a little bit confused, and it is the more we become in a rush. We are so much in a hurry because the market there is moving quick. The market there is flowing aggressively, so we find ourselves in a corner of saying, I have to react quickly, I have to take this decision quickly. If I don't take this trade now, then I'm not buying that Ferrari next week, I'm not buying that Lamborghini next week. So it's that thing, you are afraid. Even when you see an opportunity, I just want to make an example first before we analyze. Even when you see an opportunity, maybe let's say this one is kind of like obvious. Okay, let's say if you see an opportunity, maybe something like this here, you find yourself maybe saying, okay, I see that the market is kind of in a key level. Let me just put the sells without even taking a step of waiting further, even waiting for the candle which is playing out to at least close. You find yourself not even waiting for those minor things. Why? Because you are seeing this red line busy fluctuating up and down, thinking that the price is going to move down without me in the market. So we find ourselves reacting quickly, taking decision quickly because we are afraid of missing out. If you find yourself in that issue, then it means you need to train yourself. Either you train yourself by decreasing the number of trades you take in a day, or changing the time frames, meaning shifting from a smaller time frame going in a higher time frame. But I made a video about time frames on YouTube. I think it's not just one video, I think it's 3 videos or 2 about multiple time frame analysis, about which time frame to use, all those videos. So you should check them out if you have that issue. You should check them out. So let us see what we have here. I think we are just going to go through a lot of these pairs because it's a few. So let's start at the top. OzUsd. So you remember, guys, the first thing that we look at in our high time frame, it is firstly the key levels. That we look in the time frame, and also the direction. That's what we look in the higher time frame, the key levels, and as well as the direction. So that's the most important thing. So here, let me just erase my drawings here. So here, looking at the daily, it is obvious that the daily is a buyer's market. We can see price is moving in an uptrend. For those who have difficulty in spotting trends, we can see that there is the 200 period moving average. Price is above that period. Price is above that period. So if price is above, it means that it's simply an uptrend. So price is moving in an uptrend. We can see it in the high time frame. So it means that we are not on seller side. We're not on seller side because we don't want to go against the momentum. Secondly, what we can spot is that price have just corrected. Price is in a corrective, you see. So it's selling opportunities and price is in a corrective. So that's the kind of a wave. It matters as well. That's the kind of a wave. Remember that if we are willing to buy, why am I pressing? I am writing S there. If we are willing to buy, we have to be buying in a corrective wave. Remember that one. We have to be buying in a corrective wave. So it's in a corrective wave, and it looks like for us then to clearly see what's in the corrective wave, then we have to be going in a lower time frame. That way, let me just check the 4 hour. This is also going to help those who are trading in smaller time frames because they have to be following the bigger time frame. It's a must. So looking at the 4 hour, we can see here this corrective in a form of a channel. we can see the corrective in a form of a channel. So we can see that it is not yet broken. The major corrective channel is not yet broken, because here, remember the lessons of patterns within a pattern. So here we don't only have this bigger channel. If I can go maybe a greater a more lower time frame, like the 30 minutes, you can see that inside this channel we also have another channel, which is the one that has been broken. We also have another channel inside the bigger one. So it's a pattern within a pattern. So you can see that this is a best way to really figure out opportunities and outcomes which are likely to happen in the market. So let us go back there. I was just trying to show you the pattern within the bigger one. So remember what we saw in the bigger time frame. Now we are looking for possible buying opportunities, because the market is moving in a higher time frame and it is in a corrective. So then now here is what we got. What we got here is that price haven't broke the channel yet. So it means that there is some kind of waiting that should take place. And secondly, I will explain if we should wait or if we buy, and if we buy, what should you be doing? I will explain that one. So if you can look the oscillator here, we also have something beautiful, two sold zones which we highlighted in this area here, meaning the market was telling us something. We have two of them here. Look at here. So if you see two bars like this, or if the market keeps on touching this level, if you're using RSI or stochastic, if the market keeps on let me admit some people, if the market keeps on touching this level like frequently or in a closer space of time, you need to know that it's also some kind of divergence, although that divergence is not reflected in terms of highs and lows. Those who forgot divergence is simply a disagreement between the oscillator and the price. When the price is making higher highs, the oscillator is making lower highs. Then that's what we call divergence. It's a warning that price is about to reverse. So here we can see that we have this multiple touch of this 20 level, or is it 20? Yeah, 20 level here, which is the oversold level. So it's kind of like a divergence reflection, just as we had here, two multiple touches while the market was kind of going up, and all of a sudden it changed, moving to the opposite side. So this is same thing that we're expecting here. We are expecting price to be moving in the upper side. Remember about breakouts. Remember about breakouts. Let me highlight that one. So let's go back to the 1 hour now. We are from the daily and then we are in the 1 hour. Remember, it's 3 time frames. It's the wave, the tide, and the ripples. So looking here, we can see now clearly in our lower time frame, we can see that when it comes to the lows, we have a higher low, which is higher than the previous one. So that's a good thing that we are looking for when we want to buy. We have a high low which is higher than the previous one, and then this smaller high here was broken inside this channel. It means that already inside this channel, our buyers are already dominating. Our buyers are already dominating inside this channel. So here we are expecting prices to reverse, just as we can see our oscillator here, and there is some kind of spike in volume, although this spike in volume, it reflected this push up here. So we are expecting some kind of corrective which is minor, and then the market pushes up again. When the market pushes up again, now here are two options that we can do. You can either buy here when the market just corrects. After it corrects, when you see some signs of market moving up, you can either buy here, or the more safer way it is to wait for the major channel to be broken, then you enter there. And again, the third safer way, it is to wait for price to go down again and give you a low, and you enter. So it's 3 entries, 1, 2, 3. 3 entries. But the beautiful thing is that already once we have a high here, it's the confirmation that we need, because remember, we just need only the two things to confirm the direction. Remember, it's higher high and a higher low. Then it is confirmed that now buyers are in the market. So we do have it here. We have one, which is the higher low. We are expecting the higher high, and then once we get it, we then wait for the next corrective and we enter. Oh, who is writing good? Oh God. And we enter here, ne? We enter here. So that's what we are doing on OzUsd. That's what we are doing on OzUsd. And now what you have to do as a trader, your role as a trader, it is to make sure that you write this trade down, to make sure that you keep it in mind that I'm waiting to buy OzUsd. I'm waiting to buy OzUsd, ne? So that this analysis or this webinar doesn't become useless, ne? It shouldn't be useless. So let us make sure that it becomes useful. So make sure that you write it down. This will be an opportunity maybe tomorrow as the market opens, or early on Tuesday, ne? It will be ready to be bought. If the market behaves the way we are anticipating, ne? It will be ready to be bought. Let us proceed. EuroUsd. We've been trading this market. I don't know if I shared it on the public or I didn't, but we've been trading this market with the guys on the other side, with the guys on the private community. So let no one write on the screen. I'm trying to disable that issue. Let no one write in the screen. Yeah, we are good to go. So we've been trading this market. We sold it here on this pattern break here. We sold it here, and we're being taken out by a trailing stop. Ne? We are being taken out by a trailing stop because of this market here. So we're being taken out somewhere around here, ne? So we took it up there, and we've been moving with it all along. And it was not a first trade here. I think it was a second trade, because I think we started with this major pattern here somewhere around here, and there were stops there, and it gave us again another opportunity. We sold and placed our stops there, and then now we're taken out finally. Then now here is what we can say. Remember what I taught you guys, that if we are selling, if the market kicks you out, or if you go out of the trade, it should automatically mean that we are now buying, ne? It should automatically mean that we are now buying, ne? So we can see that the market here, let me go to our higher time frame. We can see that the market here is now in a very, very significant level, which I highlighted here on the 1 hour, ne? So it's beautiful, because it's like we are going to be having a lot of opportunities this week. It's in a key level, ne, which was a resistance, which is now becoming support. And it's an uptrend. It's an uptrend as well. It's in a corrective wave. What we want. It's an uptrend, a corrective wave, key level. So it's just three beautiful things coming together, ne? It's three things coming together. So then now we should be doing the exact same thing that we did on OzUsd, waiting for those wonderful opportunities. So let me try to just show you how and when those opportunities are going to come. Actually, this meeting is forcing me to delete my analysis, but no problem. So here is what we got here. This corrective, let me just do like this, clone this one. Here we have this corrective, the exact same thing, guys. We are waiting for it to be broken, eh? We are waiting for it to be broken. So fortunately, the oscillator is telling us that, okay, price is going to push up more significantly. It is going to push up more significantly. So we're expecting the market to push up. If it break out of this zone, will be buying, depending on the momentum, ne? Will be buying, or will wait for some kind of a retest and will buy here. So it will depend on the momentum. But the more important thing, it is this key level here. The most important thing I mean, it is this key level here, there's resistance which is now becoming support. So that's why I'm saying we can enter this breakout. Why? Because this is not just a breakout only, but it is a breakout which is also anticipated by a key level. It is a breakout which is also supported and pushed by a key level. But the key thing that we are waiting for, it is the momentum of the buyers. Let the buyers continue with these big green candles, then we'll be ready to take the market on. We'll be ready to take the market on. So it's buying opportunities here. Wait for a breakout, EuroUsd and OzUsd. Wait for a breakout and you are good to go. So same thing applies. The pattern within a pattern has already been broken. The pattern within the pattern has already been broken, but we haven't seen a new low and a new high. So the market is in a process of forming a new high here, and then it is going to give us a new low, and then we are good to enter. Either we enter earlier here or we enter up there. It will be up to you what type of a trader are you. And also I'll be keeping you updated in terms of these trades. How are they going to work out, and how are they going to also play out on how we should as well manage them. I hope that one is making sense. Let us proceed. What page should I analyze here? What page should I analyze? Let me check this one's on red. Yeah, this is not guys, this is not just to just throw signals to you. No, it is not like that. This is educational. This is not throwing signals at you. It is just to show you the process and how you should practice it and how you should do it. That's it. It is not just throwing signals at you. So here we have a funny move on UsdJpy. It has been a downtrend, but unfortunately it has broken our analysis on Nasdaq. Okay, I will check Nasdaq. So we have this resistance which has broken. So it looks like the market is now controlled by buyers. Why? Because we now have some new lows, and we also have a new high which we don't know here, which is either this one or maybe the market is going to bounce there. We don't know yet. So the key thing is that now the market, it is on the side of the buyers. It is on the side of the buyers, although it is still below the 200 period moving average, but we are not blind. We can see the market structure. It is buyers market. So let us go to a lower time frame and see if we have anything to spot there. Okay, still the corrective haven't begun yet. Now we have a beginning of a corrective. Let me try to show you. Hi, can I please ask, how do we measure momentum, when and how gold, if time is still? Yeah, we'll check gold. How we measure momentum. Now my chart is giving me problems. I'm having a problem. Let me reopen the chart. I don't know what it's doing. How we measure momentum? Momentum, we just measure it by a lot of things. It's candles, the number of candles in the wave, the size of the candles which makes the wave, and also the size of the wave, and also the time it takes for that wave to be complete. But I will just highlight those when time permits. So yeah, on this pair, guys, we are waiting for just where is it? We are waiting for the corrective, which is information here, which is this corrective, which is information. Now remember, it is buyer's market that side. So here is some small corrective which is starting. So it's either you wait for a bigger one, or you just trade this one after it's being broken, because even the oscillator down there, it is giving us some buying signals which is coming in. So yeah, we are waiting for this corrective to be broken, then you can put on your buys, which can be short term, which can be short term. Why? Because looking at the daily, we can't have a corrective which is just one candle. In the daily, do you see that it reflects as one red candle? So we can't have a corrective like that. We are waiting for something a little bit visible. For an example, just like this, and then the market goes up. Remember the Fibonacci ratios when it comes to retracement. That retracement is either it's around 32%, around 50%, or around 61%, so on. So we are waiting for something significant. We're waiting for something significant. That's why I say, if you are going to consider this small corrective that we see here and say, now this is a corrective, after it's broken, I'm buying. Yes, you should buy, but it's a long-term, it's a short-term trade. It's a short-term trade. If you buy, let's say after it's broken and retest, if you buy, your stop loss should be as tight as possible, and you should be babysitting the trade. Let's go to gold. Yeah, I welcome those guys who are just joining. I welcome, and I see a lot of new names. I welcome you guys. I welcome you. We are here to learn and enjoy Forex trading. Let's check on gold. So this thing is Yapapalendo. So here on gold, price is on the support, guys. Price is on the support, and it's like there is a beginning of a downtrend, although it started all the way back there, but it's like now the 200 period moving average is being broken. So it's kind of like there is momentum on the seller's side. However, there is also this level that we cannot ignore, through which price has started to react in the bigger time frame. Through which price has started to react in our bigger time frames. But let us look it clear here. So this is what we have. This is what we have. We have these structures which are likely to repeat itself. These structures where there's an ascending channel, it's being broken. Ascending channel, it's being broken. And also there might be some kind of an ascending channel here as well. Where is my drawing tool? An ascending channel here, and then it's broken again. So that's why I said it's a seller's market currently, because the major levels that we see, or the major highs and lows that we see, they are becoming lower and lower. They are becoming lower and lower. So we're expecting as well something lower and lower. So now, for the fact that it is breaking this downward flow here, which we usually speak about when we are trading synthetic indices, for the fact that this downward flow is being broken here, where is this thing? To those who are scalpers, to those who are scalpers, such thing can reflect as a buying opportunity. But mark my words, to those who are scalping, such can reflect as a buying opportunity. Why? Because price is on a key level, and this key level on a lower time frame, it is seen as a reversal level. It is seen as a reversal level. Remember, highs and lows in high time frames are seen as market reversals in lower time frames. I'm glad to be here. I'm your biggest fan on YouTube. Welcome, Jabulo. Welcome. So to those who are trading on lower time frame, guys, this can be seen as a buying opportunity. Why? Because I've highlighted the downward pattern or flow, which has been now broken, and moreover, there is some spike in volume. Remember, on the spike in volume, there is usually a significant move coming in. Now we can see a spike in volume, the buyers came in. Here there was a spike in volume, market shifted direction. So whenever there's a volume spike, we're expecting some kind of significant moves. So here we're expecting that, but remember that the major move, it's a downward market. It's a downward market. It's a seller's market. That one, you should keep it in mind whenever you press that buy. Keep it in mind that in the bigger time frame, it's seller's market. that will help you to manage your risk properly, ne? So I hope that one is making sense. Nasdaq. I don't have Nasdaq in my watch list. It's because I don't trade it, because the broker doesn't provide it. It's US what? US 100 or NAS. Maybe we should. What should I search, guys? Those who are trading Nasdaq. I think this is the chart, ne? But I don't know it because I don't trade it nowadays. I don't trade it nowadays because I can't be having like 4 brokers. And I don't see a purpose of trading, having gold in your watch list and also adding Nasdaq and then adding Bitcoin as well. All those assets, they take much in your account when they take, and they also give you much. So yeah, if this is yeah, this is the right one, I believe. This is the right one. So higher time frame, it is buyer's market, but the market is finishing the impulsive move. The market is finishing the impulsive move. Continue. The market is finishing the impulsive move, meaning it is going to start a corrective wave. Ne? It is going to start a corrective wave, and that corrective wave is a downside wave. Ne? It is a downside wave. So they don't have a volume for it, and they don't have this indicator for it, so no problem. You can use the RSI, guys, or the stochastic. Ne? So we are expecting a downward move here. Why? Because this overall, this is an impulsive move on the high time frame, and it is like decreasing in terms of strength. Ne? Decreasing in terms of strength. Why? We have this corrective which is bigger than the previous small correctives that we are receiving. Ne? So we are expecting something bigger again, ne? Because the momentum is decreasing. As well, we can see that we have this major move, it corrected, and then we have this one, it might start to correct, which means the buyers waves, they're becoming smaller and smaller, and the sellers waves are becoming bigger and bigger. Ne? The one who asked about momentum, that's a clue of it, that's just a drop of it. Ne? So we're expecting a downward move here. It's simple, guys, it's simple how to spot it. Just wait for this flow to be broken. It's simple. This is how I analyze, and this is how it works. This is how the market works. Wait for this to be broken, and it can be better if it can be broken closer or around this level. Ne? It can be some kind of a better confirmation. Ne? Rather than if it becomes broken up there. Ne? But once it's broken, you are entering in this lower time frame. It will be seen as a counter trend trading, even in the high time frame, ne? Because it's an upward market. But because you are looking for opportunities, you can take a counter trend trade, because remember, a wave in a higher time frame is a reversal in a lower time frame. So that's why you should take this as a reversal if you're in the lower time frame. Ne? But if you want to be on the safe side, wait for the market to go down and give you a new high which you're going to sell into. Ne? If you want to be on the safe side. But if you're aggressive, it's good as well. You can sell after this pattern is being broken and put your stop loss at a tighter level. Ne? I hope it is making sense. Yeah, we are left with 3 minutes. 3 minutes. If you have questions, guys, you can ask it. Let me just highlight the issue of momentum. Ne? Remember the trades, guys. OzUsd, EuroUsd. Remember those trades. Remember those trades. I'm also watching them. I even have like physical prints, like papers, physical print of the chart, because I figured out that I see a lot of things even when I look at the chart, even just physical. But I do it for my research, guys. I don't say you should print charts physical. But if you have the printers and everything, you should just sometimes print it on a paper and just look at the market in a paper like you are reading a book. So it happens that I find a lot of things just as I'm looking at the price like this, not analyzing, just looking at the chart like this. Ne? So when it comes to momentum, I said it is determined by candles, it is determined by the waves. Ne? It is determined by candles, the wave. When it comes to candles, it is the size of the candles, the number of the candles, ne? In the wave, it is the size of the wave, and as well the time, the period it took to complete that wave. For an example, I hope we have a good example here. For an example, we have this impulsive wave, corrective and impulsive, ne? So for us to see if sellers are decreasing in strength, we should observe, we should compare this current wave or the latest wave and compare it with the previous one in terms of all these things, ne? The size of this wave. Okay, these waves, they are almost equal, ne? They are almost equal, ne? But then we should look at the composition or the makeup of these, the candles. You can see this one, it pushed down, it corrects, and it went down again, meaning there are a lot of there are some kind of significant structures. Why? Because the corrective here is in the opposite side, yet here we don't have a corrective that is pointing on the opposite side, ne? So it means that already saying this corrective inside the impulsive, it means that already there is some kind of weakening in momentum, ne? Already just looking at the structure of the wave already. And then as well, you should see at the time it took, meaning this period, the time it took for this wave to be correct, to be completed, compared to this one.